We're up and running. Recording started. Good evening. Welcome out to the Market Watch Group working sessions. This is our intermediate/advanced session. Glenn just carried us through a remarkable session as always. And as I said, if you have any specific remaining questions about any concepts or anything he mentioned, he's here for you to ask another question directly to him while I start going. You can just have a little side convo that everyone else maybe would benefit from. That would be fantastic. Take advantage of him hanging out with us. Other than that, I'm Scott. Let's get going. Here's our disclaimers. As always, we're not advisors or brokers. We don't give advice or recommendations. We are here for education and illustrative purposes only. As always. And what are we going to do now? Let's go to the platform. A little check-in. What do you think is going to happen to the posture? Definitely, at the very least, a stall. I think a regression. The question is how much? Half a point? We'll see a little bit more tomorrow. It hasn't been devastating. Right? Let me get up. I know you guys were looking at the SPY, but you know that's where I like to start. Well, I'll tell you, this morning we were all like, hell yeah, what? It looks great. We also know that it's always a long day. The days are long. We're going to see action coming in and going out. And so what looks miraculous half hour in, we convince ourselves to be patient. Who felt the itch a little bit to pull the trigger on a trade early in the morning? Be honest. Well, still in the trade. Amazon still profitable. Looks great. Palantir not. Still viable trade for me, though. It hasn't gone wrong. It hasn't gone as expected, but it hasn't actually reached a crucial point of disruption where we say now we need to close it. So, okay. Okay. Apple was one that I was looking at. Bob stopped out. Okay. I looked at Apple this morning. I was thinking if this thing holds up. It didn't yet. Still coming down. Still sitting on top of the 50. Like Glenn said, tomorrow we have some news that could act as a binary catalyst, one way or the other. Boom, boom. Up or down. Heiken Ashi's not going to be there yet for us. It's going to be a transition candle. But I don't know that we need to wait for, if we get one more that's not that big, I think we might still have a go, but we'll see. Maybe the buy signal comes on both the standard chart and the Heiken Ashi at the same time. That would be, I think, a potential. Okay. Let me go back. SPY. Where are you? Okay. Ooh, look at all these fun lines. All these colorful intersections. So we did have above average volume yesterday on Monday. On Tuesday, not on Monday, Tuesday. We did not yesterday. We did not today. So, in order for our volume not to get disrupted, it's going to be disrupted unless tomorrow we have a buying day with volume. What's the viability of that? I think that's in the cards potentially, right? I'm certainly not predicting it, but I'm saying if the market gets some favorable news, that could be what we're looking for as the catalyst for the bounce. I'm going to draw it here in just a second. If my, where's my pen? Is it up? And I just don't see it. There it is. Okay, hold on. Let's say tomorrow we get something like this. And it comes with some volume. All I need is 5% above average. It doesn't even have to be that much. Takes out these highs. Yeah, I would probably say you're going to see some signals across our watch list in that circumstance. Let's go see what the VIX is telling us about institutional fear and how much we need to be concerned about it. Definitely still concerned. I am. We already saw the market's propensity to overreact. We know that we're looking for this type of an escalation move as a precursor. So the question is, did we have it through here? No, it dropped low and was just kind of basing. But then all of a sudden, the question is, wait, if this comes down and turns, you can see that's an escalation pattern. Now, is that an escalation pattern that I think would get up to 65? No. One that I think could get up here to mid-30s? And that's a lot. That's a lot. What does that mean? That means that if we only get a couple of days pullback and then this thing turns like that, I will hedge. And if it takes off, I'll be hedged. And if it goes up for a couple of days and then it rolls over, and then we get a higher low, I'll unwind that hedge and then I'll increase bullish trades. Remember what our score is. We're still bullish. We're still overall bullish. I don't think that this VIX transition like this is going to happen anytime in the next day or two. And we're just sort of trading to get through tomorrow and see if we're going to get some new signals on. But this was okay. It didn't quite take this level out yet. If it accelerates tomorrow, we'll see something like this. It could give that much back tomorrow. That's why we need to be ready if we're going to take trades preemptively. The news tomorrow comes out pre-market. If you look at the economic calendar, on Friday, September the 6th, our non-farm payroll U.S. employment report, expecting 160. That's a pretty reasonable number. That's a maintenance number. If we get 160, the market's maintaining. If we get above 160, even better still. And if you notice down here, oh, the SOM indicator, where? We crossed it. Everyone says there's weakness. There's not. Not that I've seen. I'm open. If someone says, here's data that suggests, please. But so far, this week, what's happened? Now, the job openings did come back a little soft on Wednesday, but the market shrugged that off. No problem, right? And remember, we said that 7 to 7.5 is actually a pretty strong number, even in a bullish market. So we have room for that to come down without it being concerning. 8.1 is out of the norm. It's the exception. We want to make sure we understand the norm. Then we look at ADP. They're expecting 140. They got 100. Yeah. Again, that wasn't great, but what do we get here? Expecting to be down at 225. We're at 227. It came in lower than expected. Productivity as expected. Labor costs lower than expected. Essentially, these reports kick the can to non-farm payrolls. If we get 165 or better and unemployment drops to 4.2 as expected, so that would only be a very, very marginal surprise or better from the number of jobs. And if we got as expected for what's going to transpire in regard to the unemployment rate itself. If you think the SOM indicator was triggered, you're thinking that there's an expansion of volatility in the labor market caused by increased workforce reduction. Yeah, so, all right. Okay. What else did we need to look at? $60.40. That's where we are right now. Has anybody joined the 50 basis point count? This is 50. This is 25. I'm a B. I love doing informal polls to make sure. So this is Scott. 25 for Clint. Anybody think it's going to be 0 at this point? It's funny how all of a sudden it's close, right? It's closer than you think. We're 12 days away, a week from this coming Wednesday. All right. Today's heat map, where do we see a little bit of strength? The only strength, Tesla, Amazon, consumer cyclical leaders. Where we happen to have a trade on, that trade is doing well. It's always good to be rewarded for patience. Bob says he's in the 50 camp. Fair enough. That would definitely help the market when that day comes. I can tell you that. All right, let's get to the watch list. So what are some of the trades we're thinking about? As I said, Apple. Yeah. Stochastics is down here. We're off the high a little bit. My thought would be, I don't know. This one might be like where I would be more comfortable with a Heiken Ashi trade, target of 240 or something like that, moving the stop. It's tough to look for too much on something like that. Aflac, you're too early. Amazon wasn't as good as it could have been, but it's pretty good. Let's hope for a good bullish day. That gets you to that first, ideally it gets to that first target tomorrow. I would absolutely snatch that. Whether it's a half or a third, a quarter, I would say somewhere in that range, maybe 20%. If you had 5 contracts, maybe you only do one. I'd say maybe 20 to 40. Yeah. So if you don't have at least 3 contracts, it's 50-50. If it's 3, you might do a third of them. If it's 4, you might do a quarter. If it's 5, you might either do a 1 or 2. That's what I'm thinking about. Who's in this still? Amazon. We got a little hiccup. We said it could hiccup. We know things hiccup. No problem. Sandy says no. Sandy, did you take some profit at a good point? I hope at least. No. Well, all right. AXP. Wrong timing. Understood. Hopefully there's a lesson there for you. AXP setting up. Look at that pullback. Hammer. Old resistance becoming new support. Stochastics looking good. We said financials have strength, but we're overextended and we needed to see a pullback. Well, okay. Here is that pullback. Magnificent. Okay. Let's see. Bank of America. That's early on the pullback. We got to be patient. BK just kind of pausing at a resistance level. Glenn made some money on Amazon. Yes, sir. Yes, sir. Winner, winner, chicken dinner. BLDR. Setting up. No rush. If it's going to go, we're going to wait for it to turn. Citi, no rush. Carrier, a new one on our industrial list. Some old resistance here, turning into some new support potentially here. Caterpillar. That's too much. I think that's too much. I think I want to see this one rally up and down again one more time. CL just a little overextended. CMG, I think, is a maybe. Good night, Glenn. Good to see you, sir. Have a good night. We'll see you soon. You all will see him in the morning, so it won't be long. 12 hours. We'll see you in 12. CMG looks, I think, feasible. What did I say? I wanted to see if it could recover post-news announcement when they lost their CEO. Well, we now got to a higher point than it was before the CEO left. So I feel like, yeah, they shook it off. Pickup rumor for Caterpillar was false and AI generated croc. Oh, AI, you wily bastard. Ooh. Tricksy. So tricksy. Chipotle, I think, is on my maybe list. Costco's still on my list for a good setup. Carvana, as long as it holds the 50, but it's at do or die time here now. Remember that what our thought is first we think flag, then we think consolidation. Then we start to think, if it gets any lower than this, now I think that means it's no longer a pullback. Now it's worse, right? So it's at a crucial time, Carvana. If it doesn't hold up, we bounce it. It's gone. Industrials look fine. Looks pretty strong. Fastenal. Yeah. See, it got ugly, but it held support. It's not great. GBTC, not great. Gold. Yeah, it's staying pretty bullish, right? General Motors. General Motors, what do we think? I like it. That's a big, deep V cup and handle. Whoom, whoom. Now we have this. I'm good anywhere through here for this handle. And what I look for, first the cup, then the handle. Yeah, I like that. As far as the retail segment or the consumer discretionary segment goes, that one is a good prospect. Google, you can see Google is just tried. It's barely holding support. I'm not on Google. I expect it to go sideways. It needs to show more strength before I'm willing to bite. Goldman on the menu at support, high or low, at the 50. I know, Google. Come on, you're better than that. You're embarrassing us in front of our friends. Home Depot, viable. So there are a couple of discretionary. There are a couple of financials. There's at least one technology and at least one industrial. I mean, we have still a broad range of setups because this thing has not been convincing yet. We need to be convinced. Look at ICE, strong but not tradable right now. IWM maybe holding the 50, we'll see. JP Morgan on the list, strong. You'll have a few to pick from that we're going to be looking at. We're going to start setting these up. Whether it triggers tomorrow or moves into next week, we'll see. We'll see. KBH, maybe. If you like home builders, that's a maybe. If you like regional banks, that's a maybe. Coca-Cola pulling back. The defensives pulling back a little bit now. Yeah, that's the cycle. If the defensives are pulling back, and will I trade them this time? Yeah. And that means that what the market's going to do to punish me is it's this time when I traded it, this time it's going to be like, nah, now defensives have lost their steam. But I have to pay penance for my mistakes. So, yeah, Coca-Cola looks pretty strong. All things there. MasterCard, strong, starting to pull back. There's another one from the financial sector. Very good in the financials. So, with whatever else we've seen, we do expect our market posture to drop a little bit. That's for sure. A lot? No. I don't think very much at all. Look at the size and range of these companies that we say we like. We like Apple, Amazon, AXP, BAC, BLDR, Carrier, CMG, Costco. We like General Motors. We like Goldman, Home Depot. We like JP Morgan. That's a broad range of big, attractive liquid companies. So there's nothing that looks like despair to me. Meta. Ooh, Meta was close. Later in the day, I would have probably said yeah, but it didn't quite. If you took it, I would have been like, yeah, I get it. Anyone trade this? Anyone think about this? MMM, a little pullback, just like Coca-Cola. We're seeing that in the defensives. Just a shifting of money flow. That's all. Can't afford Meta. Out of the money options, Sandy. I'm going to stop right here. And I'm going to challenge that assumption. Dun, 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 dun. That's the theme song for when I challenge assumptions. I'm not convinced it's the right one, but I'm just testing it out. Okay, so let's say we wanted to go. How far do you like going? 30 days? Is that enough? Do you like to go all the way out to October's? Inquiring minds want to know. I'm going 30. Pew. Now, these are expensive. Look at them. Expensive options. Could I go further out of the money? Ooh, even if we go far, you might be right. You might be right. Less than 393. Okay, we'd have to go short term, 2 weeks. We'd have to go out of the money. Let's go further out of the money. I can go out to the 520s? No, let's go 525s. 525s for $1.30. So I could do 3 of them. Bob said, Bob bringing up a great idea. He said, well, you could always buy a call, sell a call if you have level 3 and make it a bull call spread, because now you can make it what you want. Right? Absolutely. That's a viable option. So if you want to buy them, you can go out of the money. Or you can, you got to definitely sell. So what could I do here? I could do 3 of these contracts. I'm $390. Bam. Depending on your risk level, not even close to risking that much, right? People think like, but you're so far out of the money. It doesn't matter. This has a delta. It has, we can still assess gain and loss. So you can see here, if my target is, is something going on with Meta? What's happening here? Buy for $1.30 today. Today is the 5th. That looks right. Okay, so what do we say our target might be on something like Meta? Pew. I am going to get to the trading plan, I promise. Target, yeah, look at that. Target's 542. Now, it's got to get there by the end of next week, let's say, right? By the end of next week. And you're day trading only? Ooh, well, that's much different. That'd be a little different. If it was a day trade, I'd change my time frame if it was a day trade, right? I'd come down here and I'd say, all right, I'm going to try to get in and catch. I'm going to try to catch one of these moves here, which is about, let's call it 516 to maybe 8 to 10 points. No. Okay, good. Good. I like this better. This actually looks quite favorable, like this, because let's say 542 is our target. Yeah, 542 is our target. 542. Now, time is going to hurt us. And if we're wrong, we're wrong. We're wrong if it gets below here, 509.50. We don't need to give it a ton of space. Once we have the go signal. Now, you might think, oh, that looks off the charts ridiculous, Scott. 305 to make 4,800. And of course, I'm not going to get that because I go Friday, Saturday, Sunday, Monday, Tuesday. Oh, I'm on the wrong. Nope. Oh, that was so bad of me. I'm on the wrong month. I needed to be on the Septembers for 15 days. That's why it looked so good, you guys. Hold on. Let me reorient myself. I faked myself out. That was a test. No one saw that I made that mistake. Shame on you guys. Oh, Clint got it in time? I'll give him credit for it. He gets credit. I'd probably still go 555s. I mean, you can go 560s and still get 3 of them. Right? I can go here. I can get 3. He was typing. I'm giving it to you. I'll give it to you. So you can see about 3 to 1 still. You can get 3 to 1. Or like Bob said, maybe instead of that, I go out to October and I go to a vert and I go back to 12 of these and I say, you know what? I'm going to do a 525, 530. And I could maybe even do something like that. Where your cost is $225. And if you went a little further in the money, or a little further out of the money, actually, let's go 530, 535, 208. Yeah. Anyway, this has some potential. What do you see here? Risk 335, gain 935. Now you are getting your 3 to 1. You're getting a 3 to 1, and if you get up into this area up here, time actually is on your side, right? So if you get the move to 542, you're like, should I stay in for the weekend? Yeah, the weekend's good for you. You make time. Uh, 25% in 28 days. Nice, Bob. Love it. Okay, we have 10 minutes. Any questions about anything in the watch list? Let me know. Otherwise, let's have a chat about risk management. Let's have a chat about risk management. Oh, you're very welcome. I'm glad we could stop and look at that. Absolutely. I want to remove those later. What's going on here? Get out of here. Risk management. Number 1, portfolio heat. And did we lose some people, or is it just quiet in the room now? Who's here? We've lost a couple of people. Oh, man, I thought that was good. They dropped on us. All right, fair enough. 1 to 10. How comfortable are you with the concept of portfolio heat? What it means, what your number should be. We're going to talk about the big 3 today as a very least. What is portfolio heat? So if I said right now in this market, How much portfolio heat are you willing to have? Who feels like they'd be able to give me a range of numbers? Need to review? Okay. Let me know. No. Okay. Now remember, we're in risk management. So when we talk about portfolio heat, we're looking to identify total portfolio risk. So if everything in my account stops out at one time, how much did I lose? Right? Catastrophe. Catastrophic implications. That's going to help us dictate, right? So for example, 5%, Sandy said. So my maximum portfolio heat, anywhere from 18 to 21%. Now that's based on Kelly, 18 to 21. So do I have a spreadsheet up here? I don't. Hold on. So let's tie this back into portfolio heat. Let me come in here, onboarding docs. Let's go to a sample. Bada boom, bada bing. Okay. My portfolio, oh, that's pretty good. That's perfect. 19%. 19%. No, that's expectancy. Kelly's 15. All right, we'll go with that. 15. What's the first thing I'm going to do with that 15? I'm going to multiply it by 0.7. Why 0.7? Because if I employ 70% of my maximum Kelly and achieve expectations, I'm going to achieve 90% of the capacity of maximum Kelly. What this tells me is that last chunk of risk, that last 30%, isn't very helpful. Yeah? It goes like this, and then it slows down and gets up here. And so here and here, this is 70. This is 100% at the top. And this would be taking way too much risk, where you start to give back money because you're taking too much. We want to live our lives in this zone right here. So what we're doing is we're saying 100. What is 100 for me? Well, we just went to the spreadsheet. The spreadsheet said 15%. That's maximum Kelly. So now we move over here and we say, okay, well, what's 70% of that? 10.5. Right? The reward to risk for this last bit of risk is not helpful. You're like, oh, I want to squeeze every drop. No, you don't. We don't need to. Right? Pigs get fat. Hogs get slaughtered. Slaughtered. 10.5%. That would be maximum portfolio heat. That's what I'm willing to have on. If I look at the conditions and I say, oh, conditions are great right now. These are best conditions ever. If I'm at a 6 or a 7, I'm putting all 10.5 on. And I'm even willing to let it drift closer to 15. Right? I'm okay if it drifts that way. It's not bad for me, but I know it's better for me to keep it in this lower range. Right now, I would say with our market posture where it is, I would probably put myself somewhere in this 50 to 70 range. Somewhere between 7.5 to 10% risk at any given time right now. So if I have 1.5% risk per trade, yeah, then I'm going to have anywhere from 5 trades to 7 trades simultaneously. Yeah. What do you think about that? What do you think about them apples? Let's make sure you know this is a 10%. So that's why Kelly, I think, is an important thing for us. And this allows us to kind of operate in this parameter over here. So my portfolio heat We know is 10.5 is where I look to keep max, but I know that I'm willing to let that drift even up towards 12 or even 13.5. So if I have 7 and then I have 8, 9 trades on, I'm not going to be like, oh my gosh, I have too many trades on. No, if I get to 11 or 12 trades on at 1.5%, then I'd be like, whoa, whoa, whoa. What you talking about, Willis? Anyways, all right, let's go back. Does that make sense? I hope that makes sense to how we take Kelly and utilize it to really construct an optimum risk management plan, beginning with that starting piece, which is heat. What do we do with the heat? We broke it down to trade risk. My trade risk is 1.5%. I'm comfortable with that. So for me, because I know those two things, then I'm able to deduce, right? So I'm here and I'm saying that, 10.5, which means I'm willing to let that drift a little, but that's what I'm thinking. 1.5 here. Number of trades at any given time, that could be upwards of 7. And then even 8 or 9. So I would say 7 to 9 trades is the capacity for this setup. Now, risk adjustments. Risk adjustments means I'm only going to be here when I think the market is a 5 to a 7. If it drops down to a 3, well, we'll take our risk down to like a 5 to 7%. If it drops down to a 1, our risk is down to maybe 3 or 4% only, where we're not willing to put a lot of skin in the game because conditions have devolved. They look terrible. You don't want to, it's a hurricane. You don't want to go fishing. Just because someone's like, oh, I went fishing in a hurricane once. It was great. You should try it. You're like, nah, I'm good, bro. I'm good. So this is where you can see that these three have to connect. Now, Sandy might say, I'm only ever going to want to be in 5 trades at one time. Well, if she knows that, and she knows that she's willing to be in 10% risk, then she's going to think about doing a 2% risk per trade instead of a 1.5. And now you're customizing this to your own preferences and your own style of trading. And that's what you should be doing with this. She said 4 max. So she might even be she might say, hey, you know what? Now here's the thing. Your account size is going to help dictate this. If you're like, oh, I'm trading with a $500,000 account, you might not take 2% risk. That's $10,000. You take a trade, you stop out a week later, boom, $10,000 is gone. You might be like, yeah, no, I'm not interested in that. That doesn't sound great. Now, on the other hand, if you start with a smaller account, if you say, hey, I have a $5,000 account, well, I can't really do 1.5%. $75 risk, that doesn't jive. I'm going to have to do 3 or 4% to get 150, 200 of risk. Now I can do something a little easier. So does that make sense? These are the considerations that I want you thinking about. If we get this first part right, it's just a matter of talking about how you move down from optimum to other levels based on conditions fluctuating. It's not like there's some magic secret. I'll just say, hey, look, when you feel like the market's pinching and tightening up, what are you going to do? Contract your risk. When you feel like the market's getting better, what are you going to do? Expand your risk. So realistically, risk adjustments in correlation to market posture are the same. Now, tsunami indicators, you know that my primary tsunami indicator is the VIX on a higher low. That's simple. Last thing you want to think about is this. When would you take a break? It could be based off of a drawdown. If my account draws down 10%, I'm out. 12%, I'm out. Okay? It could be a number of trades. Now, if it's number of trades, yeah, you can't be like, if I have 3 losers in a row, you got to give like 7, 8 right before you're like, okay, something's going on here. And then the third mechanism that might cause us to temporarily pause our trading to reevaluate and assess conditions would be if you're out of your flow, your zone, where you should hopefully start recognizing, what does my best trading look and feel like? How do I feel? Right? How am I? It's so interesting because for me, it's always number 3. I get frustrated. I get antsy. I get impatient. It typically happens around the holidays, ironically. And I'm like, all right, that's it. Taking a week off. It inevitably lasts only about 3 days. And because I've kind of put myself in the penalty box for at least 3 days, I feel like I've cleansed and I'm ready to move forward. But we can't just smash mouth forward when things are wrong. Like, oh, I'm just going to keep trading through it. Blah! Imagine that. Imagine the blade of grass telling the lawnmower, it's just gonna work through it. No, you don't tell the lawnmower anything. You duck. You try to figure it out. Can you restate the tsunami indicator real quickly? Yes, and we'll continue to talk about it because it is in a potential setup position. That's not it. Let's go to the VIX. Higher low. So from here, that was a hedge signal. That was a second hedge signal, another higher low. So when things were falling apart, we weren't like, oh, what's going on? Right now, we don't have a higher low, but if it goes up and comes down, and then it turns, guess what? This low is higher than this low, and our fear is what we saw back there. Expansion. Look, even this one back here, it doesn't just spring up. We get signals as it's developing. So when it gets to this point, you already had signals helping you understand that. That's what we're looking for, Bob. All right. Whoa. I hope that was a good session. I think I drove a few people away. Maybe it's because I say it's intermediate advanced. I hope that's not why, but maybe I'm just boring. Maybe I should look in the mirror and answer that question. It's good to see everybody. Tomorrow morning, Glenn will be there. 7:15, 9:15. Never boring. Thank you, Bob. 9:15, I'll be here at 3:15, so you can hang out with him in the morning, me in the afternoon. I'm looking for signals, plain and simple. Possibly a couple of alerts that might be triggered. We'll see. Have a great rest of your night. See you tomorrow. As always, happy trading.